Hello there, I'm Monica Gibson and I'm joined in the studio by Richard Watts from HR-Maritime to discuss the changing face of trading companies. Richard, thank you very much for coming in today again.
Thank you.
Now, we have seemed to see a bit of a shift with trading companies. Could you talk us through this, please?
Well, we have to look at the traditional view of trading companies. For many, many years, we've had a whole range of sizes of trading companies. And so you have the small niche trading companies, which take advantage of very specific markets, then moving up to medium-sized trading companies, which are very active all over the world, and large trading companies. And the general model was for these companies to buy their cargo at the port of loading in the country of origin and to sell the cargo at the port of discharge in the country of destination. We see this changing quite quickly at the moment now, partly because of the credit crunch and partly for other reasons. And so we see the medium-sized trading companies slowly disappearing. First of all, the large trading companies are becoming much more vertically integrated. And so they are either branching out into farming, into mining, or we see mining companies or farming cooperatives which are branching out into trading itself. We've seen this over a large number of companies, and if we look at a company like Glencore Xstrata now, it's no longer really a trading company, it's a mining company. On the other hand, we have the niche companies which are doing very, very well. They are taking advantage of very small, specific areas of the business. And the problem is that the medium-sized companies are slowly being pushed out due to lack of financing and also because they're not really adding the value that they used to do in the past.
Okay, so that's the shifts that we are seeing, but what are the reasons behind this? What's pushing these developments, if you like?
Well, one of the large reasons, as I said, is financing. The medium-sized companies are finding it harder and harder to finance their trades. The large companies, they don't know what to do with all the financing that's available to them because banks are pushing more and more financing onto them so that they can fulfill their financing requirements. And we even find ourselves in a situation where large companies are financing each other. The large companies, as I said, are becoming much more vertically integrated. They're going upstream, they're going downstream, and we see this in oil, we see this in farming, we see this in minerals, and the niche companies are just taking advantage of the small niche areas of business where the large companies don't really want to take on the risk or might have problems with some of the regulatory requirements. One of the most interesting things that I find at the moment is being pushed by trade between less developed countries.
Okay, so following on with less developed countries then, if we look at that, what was the situation there before?
Well, there's a tremendous amount of trade between less developed countries, and so goods that are being exported or produced in one country and which are being consumed in another country. If we take, for example, the trade of rice between Thailand and Ghana, the situation for many years was that you would have a trading company in the middle and they would go to Thailand, they would buy the cargo, they would transport it over to Ghana and then they would sell the cargo to the local buyers in Ghana. This was for a number of reasons. First of all, purely the contacts. The fact was that it was much easier for the trading companies based in Europe to travel to Asia, to travel to West Africa, to meet the producers, to meet the buyers, to be in contact with them, to speak to them. There was communications as well. It was much easier for traders in Europe to speak directly to the buyers in Africa, to the suppliers in Asia, and it was very difficult for them to speak to each other directly. There was also the access to the banks, European banks, which have good knowledge for the trade finance. There's the financing itself, actually getting the cargo, getting the financing for the cargo you're going to be shipping. There's also reputational issues. If you're going to be chartering a vessel, then any ship owner is going to look at how many vessels you've chartered in the past, whether you have a good reputation, and if you've never chartered before, then it becomes very difficult. We also have insurance. It was difficult for the exporters and the importers to get hold of to have access to the European insurance markets. And finally, there was purely the technical knowledge actually making the trade happen on an operational basis.
I see, very interesting. But how do you see this changing, Richard?
Well, it's interesting because if you look at Ghana itself, I mean, Ghana imports huge quantities of rice. When I first started working with Ghana only 13 years ago, the buyers locally, they did not have good communications. Everything was done by fax. There was no emails, there were no mobile phones, and so if they wanted to talk to someone, then it was very difficult. Now we see this changing dramatically on so many different levels. First of all, contacts and communications. It's much easier for a buyer in Ghana to speak to a supplier in Thailand. He can pick up his mobile phone, he can talk to him over Skype, and he will know immediately what the local prices are doing, what the harvests have been like, how everything is going, and have immediate information. There's also the financing. The access to the banks is much, much easier now. The European banks, given the situation, they are a lot more open to talking to some of the companies in West Africa because they are larger companies, because they are more reliable now. If we look on the insurance side, we see insurance brokers who are actively going to Asia and to West Africa in order to try and find clients, to find new areas, new markets that work for them. If we look on the technical knowledge side, this is not really a problem. This is something that there's a transfer of knowledge that can happen very, very easily. There's a huge number of very, very well qualified consultants and lawyers in Europe and around the world who are very happy to work with exporters in Thailand, with importers in Ghana, and share their knowledge, transfer the knowledge across, and a lot of it is based on well-drafted contracts. As long as you start off with good solid documents, then it makes the trade a lot easier in the long run. And so what we see is the buyers in Ghana or the exporters in Thailand who are taking over more of this business and effectively taking away the reason for the medium-sized trading companies who were traditionally handling this to exist and to be in that market at all.
Okay, but what if we get down to the nitty-gritty, what about the long-term benefits for these importers and exporters in the less developed countries?
Well, as a whole, it can only be positive for them. Basically, first of all, if we look at the value chain itself, as we've seen many, many examples, the more control that a country has over the value chain, the actual chain of the exportation and the importation process, then the more profit that they get from it. And so if we see the Thai exporter selling directly into Ghana, then he will be getting the profit from the shipping operations. Exactly the same for the Ghanaian importer. He will be seeing the profits from the shipping operations and not paying somebody else to transport that cargo for him. We'll also see quite a few benefits in the local economies as these companies increase in size, and I think that in the long run it can only be positive for the less developed countries.
Okay, so positive for the less developed countries, but what about the trading companies? You already mentioned that, the mid-size are falling by the wayside. Is this the end? Could this be the demise of trading companies, do you think?
The simple answer is no. I don't think we have anything to worry about in the short or the medium or even the long term. As I said, we're going to see less of the medium-sized companies. It's all about what are you adding in terms of value. And so the large trading companies, as I said, becoming more vertically integrated, they are taking more control over their supply, they're taking more control over their demand, and so they are simply not really trading companies anymore, and we will see for a long time small niche trading companies, whereas we have a need for very good technical knowledge or a company willing to take the amount of risk required for a certain market, and those markets will not go away anytime soon.
So it's simply a matter of the markets evolving then?
I think so. I think the main thing we're going to see is that companies that do not evolve, that do not follow changes, are going to be left by the side, and those that do understand the changes that are happening are going to change with these changes and do very well in the process.
Let's hope that they all up their game. But Richard, thank you so much it's been a pleasure having you in once again. Thank you.
Thank you very much.
Well, that's all from Richard and myself for the moment. Please do click back to Dukascopy TV for many more exclusive interviews. Goodbye for now.